Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 27th, 2017. I wanted to do a video here to show you something that I haven't seen this in quite a while. We all know that the FANG stocks and just a handful of tech companies and big mega caps have largely led this market up. That's nothing new. That's those powerful companies are earning juggernauts. However, I posted this on the front page under the comments section on the post that I saw earlier, and I wanted to just go over this because this is, to me, a glaring red flag. This is a trend that cannot and will not last. Now, there could be a mean reversion here, meaning that this disparity that I'm about to point out, maybe we catch up with some of these weaker stocks starting to catch a bid and move higher. But here's the bottom line: is we're seeing I don't know if unprecedented is the right word because I'd have to go back in time, but a stark contrast with just a handful of stocks. See, these are ones, a couple of these FANG stocks reported last night. Those that didn't are catching a bid in sympathy. Facebook and Apple, they didn't report. You had Alphabet, Microsoft, and Amazon and Intel report. And if you look at this is a chart of QQQ, but what I'm looking at here are the components. And I have these sorted by market capitalization. So this to me, like I said, it is powerful, powerful stuff. You look at the percentage change. Sorry, wrong tool here. Let me get rid of that and grab a circle tool if I can and just show you what I'm looking at so we're very clear here. There it is. These guys here, Apple, Alphabet, Microsoft, Facebook, Amazon, and Intel. Look at these gains. Look at the volume buzz on these guys. That is what is single-handedly nearly single-handedly giving the market a 2.26% gain. Not the market, I should say, QQQ, which I always refer to as a tech fund with an Amazon kicker. That's my joking term for QQQ, because if you just take a chart, you can do chart comparisons. Overlay XLK, which is a tech ETF, and it will mirror QQQ. So with that being said, I've gone over this many times. Just the top 10 components alone, even the top five, make up the bulk of the returns, nearly half of the returns of the Nasdaq 100. So I wanted to point that out. Now let's look at a couple other things here. So this is the Nasdaq 100 QQQ up 2.27%. Let's look at the Nasdaq equal weighted index, the Nasdaq NDXE. That gives every component an equal weighting. We're down over a quarter percent. That I haven't seen a disparity like that in a long time. Sure, one day doesn't make a trend. That's another catchphrase I like to throw out there all the time. Here's QQQE. This one will show you, and actually there might have been a lag time on that other index. 0.46%. Do you understand that is, again, I haven't seen a disparity like that I don't know if I've ever seen such a disparity between the two on any given day. So now let's dig a little deeper here. Let's go back to QQQ and take a look at the internals. Now, I've shared this on the site before. A few years back, I came up with a way. I was always frustrated that the market internals they quote, they'll give you NASDAQ, they'll give you the NYSE, and that's it, I think, as far as internals go. I've always wanted a way to find out what the internals were on the NASDAQ, any index that I want for that matter, whether it's small caps, the NASDAQ 100, the S&P 500 for that matter. And so I came up with a solution that works perfect. It's a real time. I pull up the components of any index tracking ETF that'll show all the components in that index. So here's QQQ, and I simply sort those by percentage change. Now, when I do that, you can see they're in descending order. So all I have to do is go down to the bottom of the gainers, and it's going to change as we go on. So there's a couple green there. I'm going to click right here. That will count for that one red one. And like I said, they're changing as we go. So if I click on Sycamore there, it shows me that 37% out of 100%, I'm sorry, out of 101 stocks within the Nasdaq 100. There's 101 equity positions. Remember, Google has two share classes, or I should say Alphabet, and they don't have exactly 100. There's 107 stocks in there. That tells me, and I don't see any flat, that out of 37 trading positive, 70, a whopping 70 stocks in the Nasdaq 100 are trading negative, while the Nasdaq 100 is trading up over 2%. That is again, I can't say unheard of because you have to go back statistically, but I look at this stuff a lot, and I haven't seen this in a very, very long time. So now let's look at the S&P 500. The SPY is up, respectable 0.5%, nothing big. Now, keep in mind also, and I mentioned this on the front page as well, the same big names that are the top weighted components of the Nasdaq 100 are also the top weighted components of of the S&P 500, albeit at a less stark, overweighting. In other words, I don't have it in front of me, but they are the top weighted components of the S&P 500, but not by such a huge disparity. In other words, if you add up the top 10 of the S&P 500, it doesn't make up nearly half the returns of the S&P 500, not even close. With that being said, they are still the leading components in the S&P 500, and so they're giving it a bit. So okay, so what's your point here? Well, first of all, let's look at advancing declining issues. So click on percentage change, and again, I just drag down to where I start seeing red in that second column there. Okay, there's a couple here, so we're gonna have to split the difference. Remember, this is real time, so you're seeing things that are flat or near flat changing. So I'll click down here on Monsanto. That about cuts the difference. We leave a few greens, a few reds there, and that tells me 173 out of 505 stocks within the S&P 500 are trading positive. Therefore, we have over 300, well over 300 trading negative at a time that the S&P 500 is up. All right, let's take it a step further. We have the SPY, which is trading up 0.47, and then we have the SPEW, which is the S&P 500 equal weighted index, trading down 0.36. Again, that tells you if you don't give that heavy weighting to those top components, and it only makes sense. I just showed you the internals. Therefore, if you have the majority of stocks, as I just showed you, via the internals, that gives you the true picture. So the market itself, again, is being skewed by just a handful of components today. And you can look at it glass half full, half empty, but I think if you talk to just about any market analyst, they will agree that a market rising on a deteriorating breadth, especially such stark numbers, is certainly a red flag. And again, it's a matter of, I say one day doesn't make a trend. Do we play catch up? Do some of these other components start catching up? Now, as I said a minute ago, one day doesn't make a trend, but several days, in fact, a couple weeks does make a trend. Here we're looking at on the top, this is the Nasdaq advanced decline issue line. This line shows you the advancing versus declining issues. So when this line's going up, you have more advancers and decliners, and when it's going down, you have more declining issues and advancing issues. Normally, the two will track together pretty well. But what I look for here, and it's pretty accurate, are divergences between the two. So this shows you, I have a line back here, it looks like early October, I don't know exact date, maybe the 5th or 6th or something there, the NASDAQ advanced declining issue line peaked. And since then has clearly been moving lower, yet the NASDAQ composite was moving higher. And I probably should have overlaid this with the NDX, and maybe I'll do that here in a second. Now, keep in mind, this line could change today. Normally it would. You see a pop in the NASDAQ composite due to those FANG stocks. You don't see it here. This is an end-of-day chart. They're not going to update this. However, what I just showed you, there are more declining issues. So you're going to see even a starker contrast after today, because this line, all other things being equal, it's early in the day, given we're only an hour into trading. So anything can happen, but as of now, this line is going to continue to fall while we hit this pop here in the NASDAQ composite. And here it is. Here's the same chart. I put QQQ down below. Same story. You're going to see, and that's what I was working on the chart. So again, I showed you that there's considerably more decliners than advancers. So unless anything changes, you're going to see this line continue down. And now we have, should these gains hold. I'll tell you, I'm fading. I was, short the NAS coming into the day, the Qs, and normally wouldn't add on weakness. That's one thing. Try to on most positions. It's better to average up on a position. In other words, if the trade's going your way. But this trade, I believe, will be faded by next week. I think the mean reversion that's going to come will be with these big cap names just imploding under their own weight. This is signs of a not a healthy market here. So I just wanted to show you that this, I kept saying earlier, one day doesn't make a trend, but there is a trend, and the trend has been pretty clear lately of declining, a pretty significant decline in market internals as just a few stocks carry this market higher, and that's a hallmark of many market tops. Fewer and fewer names, beloved names. That's where the institutions and the individual investors are piling in. And if you have the majority of stocks within the stock market going down, that tells you that something isn't right. All right, well, let's leave it there. We'll see what happens. I gave you levels today. I posted levels to watch, and again, watch those on a closing basis. There's a lot of positioning that goes on after earnings, and I always say the initial reaction, although sometimes it is a reaction that sticks, very often it's not. So in other words, we gapped up. We had, the futures overnight and after hours trading in those FANG stocks. They were bid higher. That's carried over into today. So you want to see how today closes. And most importantly, how do we follow through in the beginning of next week? Sometimes a fade of either of a gap down or a gap up or a strong move up. Sometimes those fades take a couple days to come into effect. And again, if they don't, let's say the FANG stocks and the Nasdaq 100 holds these gains. I'm sorry, then you want to see participation within the other stocks within those indices. That's something I'll be looking for in the coming days. And to wrap this video up, just additionally, you can see here when you back out the effect of those mega cap, large cap stocks, you can look at the small cap index (IWM), and you can see that's trading down, and that's because it doesn't have any FANG stocks. So this again is a market being driven today almost exclusively by literally a handful of stocks. That's not to say there aren't other stocks up, but those that are up are making up for and then some the fact that the majority of stocks in those indexes, both the S&P 500 as well as the Nasdaq 100, the majority of stocks are down. Therefore, the gains, the above average gains on those big overweighted stocks are giving a false appearance to really what the index is doing. And again, if you're long the index, great, more power to you, because that's where your profits are or aren't. But again, something to watch when you're charting and factoring this into your analysis, because things aren't always as straightforward as they may seem. All right, this has been Randy Finney with Right Side of the Chart, and I hope you enjoy.